Good morning, everybody. Welcome to Trader Minute. It's great to have you aboard. My name's Carl. Thanks for tuning in today. A lot to talk about today. Uh, some of the early numbers, jobless claims fell 9,000 to 336. There's no special factors this time. They had California the last little while. This is the first time since September they haven't had anything like that. Overall, it's a little bit weak on that front. Really, the big news of the day was the ECB cut rates to a quarter. They were at a half, and they cut them to a quarter. And let's look at what happened right there. So right here, we're looking at the futures, and you can see a big spike in futures. Now they're well off the highs. The futures, literally this morning, I walked into the bathroom, and walked back out of the bathroom. When I walked into the bathroom, the futures were flat. When I walked out of the bathroom, the futures were up 7. That fast. And I don't stay in there very long. The futures were up 7, and it was amazing how fast those took off. Okay, now they're reversing. The market set the gap around 5 this morning, up about 5, 4.5, 5 in that range. And if you want to look at a chart, couple of charts here, let's look at where you see some big action here. This is the dollar, the UUP. You can see how it spiked this morning. And then all of a sudden you look at the FXE, which is the euro. You can see it did just the opposite, just tanked this morning as that was announced. Now, how often do you see markets at all-time highs and they're cutting rates? Not very often, right? That tells you that they're worried about the economy. It's the same here in the States. We're down there. They're worried about the economy. They're worried about deflation. They're going to do whatever is necessary to prevent it, because deflation is the death knell when we start to see deflation. That's what happened back in the Great Depression. All right. So that's the big story of the day. Really, there's welcome to Twitter, the Twitterverse, or whatever you want to call it. Today's their IPO. That's a lot of talk. They priced it in the upper range, around the $26 level, and we'll see where it goes from there. And typically, when I was day trading, I would go and watch IPOs. Occasionally, I would jump into one, but it was a roller coaster, and it was just so much volume. You just can't do much. I'd stay away from IPOs. For me, I stay away from them for quite a while. You don't have really much to go on other than just hope, because there's no past history that you can look at to help with any type of entrances. Okay, so that's Twitter, and let's hope it's not another Facebook. The Facebook debacle, that was pretty sad. That brought a lot of younger investors or younger people into the marketplace for the first time. What little kid didn't want to own a little bit of Facebook? And I'm sure there was a lot of newcomers that came into the market with to Facebook and got burned. And now look at Facebook up there in the $50 range. Okay, so I'll always leave them alone for a little while. Now today, typically before the jobs number is flat, after what's happened this morning, we're going to see what happens today. There's something to watch for. So with the market gapping this morning, if we start to see a sell, in the first hour of the day, it's going to create a lot of bearish engulfing candles. And we've talked a lot about bearish engulfing candles here in the last couple of days with the candlestick training. We like those type of candlesticks. And so what that will create is a gap higher, and then the market starting to sell off. And this is an if the market starts to sell off. That will create these little bearish engulfings, not only on the daily, but also on the hourly charts, and might create some interesting buy opportunities. Okay, now it's a day before a Fed, the Fed numbers, the jobs numbers. But we're going to be watching for that this morning. Jeff might be on and looking to make a trade if we see this take place. Okay, that's if we see this take place. Let's take a look at run through our positions right now. We've got about 4 minutes before the market opens. Now, here's TLT. And you look here at TLT this morning, you can see how it gapped this morning. It's about 50-cent gap higher based on the ECB decision over there, and has since come back down. Not where the low was here, but a little bit higher than that. But A little bit of an overreaction. We're probably going to see a lot of that this morning. Now, gold and silver are down about 1% today. So you're going to see, it looks like SLV gap down about 20 cents this morning. Our new position here, see, they closed last night about 69.29. It's set to gap down. It's going to be an interesting open for here because they got a big spread here between the bid and the ask. The ask there is 69.90, which is going to gap a little bit higher here. The bid's 69.15, which is lower than where it's at. So we'll see where that comes out. It might come out about 30 cents higher this morning. Technically, that's of little significance. All right, but we'll look at that as the market opens here. All right. Some earnings. Interesting one out of Qualcomm. Okay, they're down 4% right now pre-market. They closed last night at 69.74. They're trading at 67.20. So they're down a couple bucks. That's about 4%. But Goldman Sachs and several others are out defending them this morning. Does that sound kind of Carl Icahn-ish on Apple? He takes a big stake in Apple, and then Apple shares start to go down, so he comes out defending. Well, the Goldman Sachs doing the same thing. Okay, they missed by 3 cents. That included a 10% per share charge, which was related to litigation. Okay, the revenues were just slightly higher, but with the analyst defending what can happen this morning and what typically happens on these, I know that there's some of you out there that are in puts here. What can happen is the stock can gap down and buying pressure comes in. So if you're going to trade on that, you might think of looking at that, maybe taking it off first thing this morning here and taking what you got, because that might happen. You might see some upward pressure on it on the gap lower. Apache beat by 17 cents. And I looked at this number to make sure it was right, and that's exactly what it said. Was they beat by 70 cents, but the revenues came in at $1 billion versus $4.3 billion. So a huge miss on revenue. That's almost too big. I mean, I got to dig in that a little bit more to see what that's all about, but a $3 billion miss would be disastrous. So we'll see exactly. I'll have to dig into that and see exactly what that was. Okay, GDP rose to 2.8%. The estimate was around 2%. So even with the government shutdown, it rose. And a lot of that was because of inventories. Now remember, the GDP is a rear-looking gauge. The market doesn't put a lot into rear-looking gauges. They want to see what the future is going to hold. They like forward-looking gauges. It gets a lot of talk, not as much as it used to, because for that reason. Okay, but all right, the market's just opening up here. You can see ConocoPhillips up at the 69.63 range, gapping a little bit higher. Let me run over here to stock charts, and let's put in our positions here. So ConocoPhillips, I'm going to get this off of 1 hour. We'll look at it here. So you look on a daily chart, just gapping slightly above the 7. Now, what we'd want to see here, the price tag, remember our stop here is at 70. With this gapping slightly higher, a push below today and down through 69 would be golden. That's what we're going to be watching for today. Did I say ConocoPhillips? Capital One. Capital One. I'm sorry, everybody. Those two, COP, COF, Capital One. That's what we want to see. It's gapped higher, a pushback below the 7, which is done. There's a very similar candlestick. Oh, excuse me for a second. There's a very similar candlestick right back here. Very price right around the 25th or so of October is where you see it gap a little bit higher and push down below. That's what we're looking for here. Really, it's set up almost perfectly to do that. We just got to let the day play out a little bit, and that would be golden on our position there. Sorry, you guys. Okay, and the other position we got is on TLT. TLT gap slightly higher. It's down 2 cents. It's just flat this morning. And then ABX. Now, remember ABX, this is a position that we got into, and they came out and announced that they were going to add another 135 million shares out in the marketplace, priced at about $18.35, I believe, right around that price range. And so guess what happens when stocks add shares? Stock price falls, and we've been about that price almost ever since. Okay, as those shares are being bought up. So this is going to be really sluggish. Even if the price of gold takes a nice move higher, this is going to be sluggish for a while. And then SLV, again, gold and silver this morning are down about 1%. And SLV right down there at that prior level of support just underneath 21. And that's about right where it's at right now. I'll let that play out throughout the day. So that's a run through of our positions. Some of the things that we talked about yesterday. We talked about Yelp. Okay, so Yelp gapped up 29 cents. A gap up into that range. You're looking at this technically right now, and again, it's really, really early. The market's been open a whole 3 minutes. Gapping up into that range right now there is pretty bearish. Now, the thinking here, we did not enter this trade yesterday, but the thinking here is people, investors selling out of Yelp, maybe out of some of their positions here, in order to go buy Twitter at a cheaper price. That's the thinking. That's probably what's going on and likely to happen here. But we didn't take a position there. The other top three we looked at was Oracle. And Oracle's up 23 cents, so a gap higher, and it's run a little bit so far. Technically that looks good early on like this. And then also we looked at Conoco at Capital One. Thank you. At Capital One. And that's one we already looked at. That's the one we ended up entering yesterday. It's already pulled back a little bit from where it was, and this is the price action that we're looking for. I want to run over and look at Qualcomm. Ouch. Gap down 4%. It's right there at 67. Now again, it's being defended by some of the big dogs out there. Goldman Sachs of the world defending. We'll see where this is going to take us. Is this going to be another one of those big earnings reversals that we've seen this quarter, this earnings season? We'll wait and find out by the end of the day. But if you're in a position here, congratulations. I wouldn't hold it much longer personally with all the analysts defending. That's not to say it's not going to drop down to 66, 65. Not likely going to do that, but with the analysts defending, a lot of times it can start being bought up within the first hour of the day. So watch for that. All right, well, some of the other stocks that we've talked about here recently, the Krispy Kremes of the world has not opened yet. Let me update that. Yeah, this hasn't opened, at least here at Stock Charts. Has not opened. We also looked at ConocoPhillips. Hey, I can say it this time. COP, which had a nice little move up yesterday. Okay, and this was one that had a decent looking buy bull entry. It's just under the 74 mark. Now the bands are getting really tight, which I like to see on this. So really a push up here through the 74 mark would be a very positive signal for this, and likely going to jump up into the upper Bollinger Band if that happens, which would take this thing probably up another couple, $2-3 from where it's at. Let's some of the regional banks. Now these gave some decent signs. This one and KeyBank. So this is Zion, and then KeyBank. KeyBank had a pretty good looking signal going a couple days ago when it was up above the 1250 mark, but sold off into the close. Zion, local bank here, had a big strong move out of that same time period and still looks to run, but is not. It's approaching the 20. Well, the bigger level here is going to be the 29.5 to the $30 range. This could run for a little bit here. All right, so some of the things to watch for again today is looking for some bearish engulfing patterns. So let's got RDN. Thanks for putting these up there, Jeff. Getting some follow through. So we had a bearish engulfing pattern yesterday, a big nice one on some decent volume, and this is the second one. And we talked about these some of the indicators. If they give you two signals within a couple of weeks, a short time frame, the second one is usually a better signal. So right here, right around the 25th or so, you see a bearish engulfing pattern here with a little bit of follow through. Then you get a second one. Now this is like a mini double top. You know, it's so tiny, I don't know if you'd call it a double top, but getting some nice follow through today. So a gap lower and run lower. That's some great early morning price action. And then CVC. Okay, so we've been in a downtrend, and this is what you like to see on candlestick patterns. We've been in a downtrend, a slight uptick here, and you get a bearish engulfing. Now remember, bearish engulfing is a bearish pattern. We've already in a downtrend. These can be quite accurate up in this range as well. Hey, let's go take a look at Bank of America. Now this is still showing a lot of weakness right now. I mean, the gap below the ran below the 7 2.5, 3 weeks ago, has yet to get back up through the 7. Now, if you're new to the site, you keep hearing us talk about the 7, the 7-day moving average. In our notes, it's going to be listed as DMA. And we'll spell that out for a little while, but the 7-day moving average. This is something that we use just to give us a feel for bullish or bearish signals. If a stock's trading above the 7, it's bullish in the short term, bearish if it's trading below the 7. Okay? And we use our two different trading templates. We'll put in a 7-day moving average there as well to help us determine a little bit better entrance points. Okay, so this has been pushed below and has hit it probably a half a dozen times here in the last week and a half, and has not been able to get through it. So we're kind of at an interesting point. 14 support. A push up off of 14 could lock 14 in as some support. Early a push lower. You get a candlestick like about a week ago. Right here, this big bearish candlestick breaking down through 14 would be a very bearish entrance signal, likely to run into the upper Bollinger Band, the lower Bollinger Band here, down probably into the 1350 to the 1325 range, which would be a pretty nice drop for a stock in this price range. The options could work out really nicely. Okay, I want to check on Deere. This is a stock that we've been watching, and it's down here at the lower channel. A break of this lower channel would be very bearish for this, because we've been in this tight channel between about 81.50 and 84.50. Been there since August. You could argue since July. It just it doesn't want to break either one of those levels. When stocks get in these ranges like that, they become range bound. Whenever it breaks out one way or the other, they can move dramatically, just not having a breakout. So a break below this level would be very bullish. If it starts to push back up through 82 here, you get some nice bullish candlesticks. Odds are it's going to fight its way back up to the 84.50 mark. So we'll keep our eyes on that this morning. All right, let's take one last look through our trades this morning. Again, we're watching for some bearish engulfing patterns. Our new trade on Capital One, thank you. Just up 33 cents. It's right where it was pretty much on the open. And then TLT, moving slightly higher this morning. Okay, now we need some pretty big price action here. The little stuff like yesterday, not going to help us a whole lot. We need some pretty significant moves. So we're looking for big candles and gap higher and gap ups right here. If this does hold its support, we've locked in a little bit higher level of support on it, which would be positive, but we need some pretty significant moves. We've got another trigger that may happen tomorrow with the jobs number. Keep your fingers crossed on that one. Now ABX, again, this is just going to be sluggish. It's going to be the same. And then SLV. About right where it was. Right back there, down there at that support level. So in our chat, you can notice that our lead trader out there, Jeff, saying about 30% of the bearish engulfing patterns from yesterday are having follow through right now. But that can change if we get this market to start selling off. And let's go back over to the futures and see how we're doing. All right, so here's the futures. You can see the big gap off the ECB statement, and they've pulled back a little bit. Really from the open, they're right where they were. It hasn't moved much from the open. Let's look at a chart of the S&P right here. Hey, guess what? We're right up close to an all-time high. So it gapped up a few points, and that's about right where we're at. Taking into account fair value. So just a little bit higher here. All-time high, and it's due for a pullback. I'd love to see 3, 5, 7% correction. Corrections are fun. You can make a lot of money in corrections because you're going to notice stocks always tend to fall much faster than they go up. And if you can get predict those movements, you can do really well. Now, in a nice, incredibly strong bull market like this, getting those movements to the downside right is going to be an art. All right, so we're going to watch for that. We're not going to try to anticipate it by much because most of the times when the market starts to drop, it's bought right back up. It's got a lot of help right now, a lot of little manipulation out there, whatever you want to call it. It's got a lot of help to the upside. Okay, but again, jobs number, typically you're not going to see a lot of movement the day before a jobs number. Given a little bit of news that we've had out this morning, it could be an interesting day. Okay, everybody, thanks for tuning in. I'll be on chat with you all day long. If you have any questions, comments, go ahead and chat those in there. You can also reach me or Jeff through email. That's Carl, and that's with a C, at TraderMinute.com, and Jeff at TraderMinute.com. All right, have a great day. We'll talk to you soon. Bye-bye.